Hello, I'm Jared Nelson from the Investing Channel, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. What an exciting week in crypto, full of high drama and captivating price action. Led by Bitcoin, the whole sector went into a tailspin on Wednesday. High beta altcoins and crypto securities suffered heavy losses as investors fled, stop losses triggered, and leveraged accounts liquidated. Some websites estimated that up to $7.5 billion worth of speculative capital were wiped out last Wednesday, the second highest amount this year. When a sizable part of the market crashes, turbulence usually spreads, simply because investors typically raise money by selling instruments that are still reasonably strong. As a result, the stock market wobbled. Fortunately, Bitcoin recovered its composure by the end of the session. No lasting damage was done to the rest of the market. A flash crash limited to Bitcoin and cryptos only. But we are not so sure about the new Indian COVID strain, which is continuing to spread like wildfire across the world. It is now on course to be the dominant strain in the UK. Meanwhile, India and many parts of Asia are reporting very high cases. This begs the question, will the world normalize as quickly as previously assumed? Many summer holidays are becoming untenable as countries increase barriers to travel. Just last week, Germany installed a 14-day quarantine for all incoming travelers from the UK. While fully vaccinated residents are eager to travel, destination countries are not so keen to receive them, simply because of a lack of vaccines there. On top of this, a large part of intra-Asia traveling remains shut. Even Japan is not so keen to host the 2020 Olympics. Against this backdrop, what are the investment implications? The most obvious trend is that businesses that rely on traveling may not rebound as fast as expected. For example, many airline stocks are consolidating after their share prices peaked in March. Cloudy outlook in international traveling has curtailed investor interest in the sector. Cruise stocks are flatlining too. Carnival has been meandering sideways for the past 3 months, as has Expedia, the online travel booking company. What about the other side of the trend? Will pandemic winners do well on a sluggish economic recovery this year? Companies like Zoom, Peloton, or PayPal. What caught our attention is that some of these companies have seen their share prices pulled back sharply in 2021 on the back of rapid vaccination progress. The reasoning behind their corrections is that these companies will no longer grow as fast as before. Their high future growth rates are already embedded in their share prices. But the global vaccination progress is hampered by new COVID strains and a catastrophic second wave in many parts of the world. Will the delay in the global economic recovery lead to a rebound in the pandemic winners? Roblox, who we covered back in March, for example, hit all-time highs last week. As the pandemic drags on, this may lead to more gaming users staying on the platform. A further rally to $100 is not a far-fetched scenario. As for Zoom and Peloton, their 50% corrections are technically oversold and could be due for a rebound. And then we have those big tech groups like Google and Facebook. These giants have enjoyed a banner year because of the work-from-home trend. Their share prices are still rising this year despite a gradual reopening of the economy, which suggests that investors are anticipating significantly higher profits in the quarters ahead. Perhaps tellingly, according to Trackstar IQ, our proprietary search tracking tool, over recent weeks, high-growth-focused ETFs like SPY and QQQ have recaptured the top spot in the most viewed funds. That comes after a short period of being usurped by safe haven funds as inflation fears led the market. So we have a relative trade idea here based on the sluggish recovery in traveling. Underweight pandemic losers like travel companies and overweight pandemic winners. Of course, there are risks to this trade. The first is that the current COVID wave may subside faster than expected. Some existing vaccines are known to suppress the new COVID strains. As a result, countries that have high vaccination rates are sticking to their reopening plans over the summer. The restriction in traveling may be moderated over time when governments see that current vaccines are effective against COVID variants. The second risk is that the world stock markets correct from here, possibly due to a cutback in central banks' monetary easing. All in all, it is worth emphasizing that due to choppy market action, stops and position sizes are important in any trading undertakings. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.